the S&P. So overall for the fourth quarter earnings season, the S&P expects that to be nearly 10% lower year over year. But all it takes, right, is one company to report boffo numbers to turn the sentiment around. Which companies might be the ones to do that, and do you buy ahead of that? Let's get right to our floor show traders on this Friday. Let me start with Phil Flynn. Hi, Phil. What do you think here? Is there one or two names in one or two sectors that can actually change the trend?
I'm going to go with two. Next week is bank week, right? Big bank week. And I like Bank of America right now. I think they're going to beat the street on earnings. That's my prediction. And I also think that they're going to have an upbeat assessment because they expect the consumer to get better, which right now, let's face it, the consumer after today's consumer confidence isn't feeling very good. So I think that's going to be a beat. I think the other one is that right now, we're seeing the market move into value stocks away from growth stocks right now. And the expectations that starting to build that we're going to get going. One stock I like is Monroe. It's auto parts. I think they're going to get good because people are going to leave. They're going to leave their car. They haven't driven it in 6 months. They're going to realize it might not start. They're going to need some new parts. I'm just saying.
You're just saying. All right. Tom Hayes, I often think of, well, it used to be kind of Microsoft, and then it was Apple in the tech world that really changed sentiment once a great number came punching out of the fourth quarter earnings season. Do you have some names that you're going to be watching, and do you buy them ahead of their earnings report?
Yeah, well, Liz, I think in terms of the banks, I agree with Phil. You've got Bank of America and Goldman Sachs on Monday, Morgan Stanley on Tuesday. And this was a case today, what you saw was buy the rumor, sell the news. You had Wells Fargo is up 70% in the last 10 weeks. So to see it knock off 7% today and take a breather, Citibank was up 72.5% in the last 10 weeks. JP Morgan was up 50%. So to see them down 6, 7%, and 1% respectively, I think they're due for a pause. I think in coming days and weeks as they settle down, there'll be great opportunities for the long term. And now expectations are a little lower for Monday. So to Phil's point, Bank of America, Goldman Sachs, Morgan Stanley, they may actually do well off of earnings because expectations are now a bit lower. Then on Thursday, you have the Tech 2 Dow components, Intel and IBM, so we can see corporate demand for enterprise services, for chips. So those are kind of the key stocks that I'm watching, and that's with the backdrop of having a little weakness in retail sales due to the delayed stimulus. If you remember the political wrangling, now we're getting stimulus that more than we can handle, so that will be a good thing going forward. The vaccine rollout was a little slow. Now it's going much faster, over 1 million people a day. So these things are going to come together. I think this breather here is very, very helpful. Like Phil said, look for some value in any weakness or consolidation in the weeks to come.
Phil, are you spooked at all by this retail sales number? Let's give it to you. The headline number, down 0.7%. That is way weaker than expected. The expectation was a loss of 0.1%. So, I get that retailers are already on their heels at the moment, but what does this tell you ahead of what could be the new incoming president's big $1.9 trillion report of a spending package?
Yeah, I could tell the retail sales number was going to be down by my Christmas presents this year. We didn't get a lot. So I think it's probably because I was on the naughty list, but that's a different story. But getting back to the retailers, this was a one-off number. I think at the end of the year, I think we did see a bit of a pullback, uncertainty about the election. People were nervous. They weren't spending a lot of money. I think we are going to see a rebound. And the one thing I am cautious about when it comes to the retailers going forward is that the market is assuming that the stimulus package is going to be too big. I still think we're going to have trouble passing this thing. I think that's the other concern in the marketplace today. It's not only that it's too big and we can't pay for it, it might not pass. So we might get into more regulating. You would assume, with Joe Biden having the House and the Senate, that this was going to be a no-brainer. I think the negotiations are going to be a little bit tougher than we think. I think it's going to be a smaller package, and that could be a problem going forward.
Yeah, possibly. And a quick check on Bitcoin, because I'm watching this thing down about 9%. It's at 35,129. And we talk about Bitcoin, Tom, because, it's just been going absolutely parabolic. It's down about 3,451. Anything quickly that you glean from the retail investor as we see Bitcoin still above $5,000.
Well, there's still exuberance, that's for sure. And this is one of those pockets of froth where when you see a little bit of turbulence in the general market, money comes right out of Bitcoin. The froth comes out of, the Teslas, the Bitcoins, et cetera. So, I would just say that if you're in it and you've ridden it, maybe take a few chips off the table. It's not my cup of tea. I like businesses that generate yield. And the last thing I would just say to your viewers, keep your eye on the yield curve. With all this stimulus, you're going to see 10-year yields continue to increase. That steepens the yield curve, and it helps the banks.
I don't know. Today, 10-year retreated from the 9-month high that we had seen, but at the moment, I think down about 3 basis points. Hey, great to see you both. Try and relax over the weekend. Let me get to our pop stocks.